The sole aim and the purpose of every trader is to make profit. But in order for us to achieve this goal, there are certain criteria that must be met. And part of this criteria is your ability to analyze the market, identify key zones where you can execute your trade order, set your stop loss, and watch this trade to play out. So in this video, I'll be showing you exactly how you can analyze your price, analyze the market, which is your chart, just as you are seeing on my screen, how you can determine highly profitable zone where price can come in order for you to make your buy or sell decision. Remember, you don't just buy randomly on your chart as a trader. So there are zones where price is expected to pull back to or reach before you make your trading decision. And if you are doing the wrong thing, you will eventually get the wrong result. So there are right time frame for you to do this. There are the right signals you need, even when price comes to that particular zone where you want to execute your trade. There are certain signals, certain confirmation that needs to be in place in order for you to execute your trade. So in this video, I'll be taking you through how you can do this analysis, what time frame you need to watch out for the most effective entry, what time frame, and what pattern, what do you need to see in order for you to execute your trade. My name is Soji and you are welcome to Soji Forex. If you are coming across this video for the first time, please do well to like, share, subscribe, turn on your notification bell so you'll be the first to get notified so you don't miss out whenever we post our important video. Alright, this you are seeing on my chart, this is volatility 10, and there are indicators you are seeing, so I'll be running you through the indicators on my chart. The first is Bollinger Band and the period is 130. The deviation is 2.0, shift is 0, you apply to close 2 pixels and the color is green. The second is my relative strength index. For the relative strength index, the period is 9, apply to close, the style is 1 pixel. And this color is white. The reason this color is white is because my background is white. So if your screen background is black, you kindly change this particular color. When you tap on it, you see now you just click on green. So the essence of doing that is because we don't want the relative strength index line to appear on your screen. Then we have our levels. The level is 90, 10, 50, 20, and 80. Alright, so here is the level, and you can, if your screen is still at the default state, if you click on this plus sign, it will give you opportunity to add new level. You can say, I just click on it now, and this come up, so you can edit this to any level of your choice. Alright, so I'm going to delete that because I don't need it. Then we have our commodity channel index. The period is 14. Apply to typical price, high, low, close 3, and this is exactly what you will get. Your screen will be looking perfectly like this if your setup is correct. Now I've been explaining to you first how you apply the indicators, and I will go straight into this. This indicator you are seeing on my screen, the Bollinger Band. It has 3 lines. We have the upper Bollinger Band, middle Bollinger Band, and the lower Bollinger Band. Now basically, we pay attention to upper Bollinger Band and lower Bollinger Band only when we want to make entry. I repeat myself again, we only pay attention to upper Bollinger Band and lower Bollinger Band only when we want to make entry. Then our middle Bollinger Band, we pay attention to the middle Bollinger Band during our analysis. So we use the middle Bollinger Band to determine the trend of the market, while we use the upper Bollinger Band and lower Bollinger Band during our execution, that is when you want to buy or sell. So as we continue, I'll be sharing with you how exactly you can use the upper Bollinger Band and the lower Bollinger Band to get a highly profitable trade entry signal. And that is why you need to watch this video to the end. Then we have our indicator window. Okay, we have our level for our RSI, which is 90, 80, 50, 20, and 10. So what that means, for instance, if I sell at the level of 90, if I should be able to take partial or break even or trail my stop loss when price get to level of 50, because there is a tendency of price to reverse from 60. So you can see that this comes now from here, from 50, I beg your pardon. The CCI came from 50, from 80 to 50, and then it turns back again to this zone. Do you get? And if I use 50 for my entry confirmation, just as you are seeing here, if I use 50 for my entry confirmation, whenever price get to 90 or 80, that is for a buy, I will exit my trade. Okay, so that is how it works. And if I hold it and it gets all the way to this zone, once it gets to this zone, I will exit my trade. So most often we make our pullback entry. Now pay attention to this. We make pullback entries based on candlestick pattern using the level of 50 on a 1 hour time frame, and we use the level of 90 and 10 on a 15-minute time frame. So that is exactly how this works. Now let's go into how do we begin our analysis. First of all, if you cannot identify how to analyze the market based on a structural point, just as you can see, this is a higher low, this is a higher high, this is another higher low, and this is another higher high. So to some of us, this approach is complicated, and that is why I got you covered. You can now use the middle Bollinger Band to do this analysis and get the same result. Question is, how exactly do you use the middle Bollinger Band in order to get this result? Simple. Whenever price is above the middle Bollinger Band, this you are seeing, price is above it, it means we are in an uptrend. And whenever price is trending below it, it means we are in a downtrend. So that is exactly how it works. Then number 2, what again do we do once you have determined your trend? Like in this scenario, this is an uptrend. So we will be looking at only opportunity to buy. Now that we know our trend, what is the next criteria for us to do? Our next criteria is for us to mark out our point of interest. Now, what is point of interest? Point of interest are those zones that you want price to pull back to in order for you to make your trading decision, which is decision either to buy, to sell, or any of your decision. So for instance, let's consider the price left to this zone, price came back and price went up. So let's assume price is here. So what do? We will look for our point of interest. The point of interest can be your order block, can be your support and resistance. It can be your fair value gap. It can be a smart money cube. If you don't understand each of these terms, I advise that you check through the channel where I have explained each of these point of interest. Now, this is what we have analyzed. We said now that price has left this zone and price is here. So having said that, let's now put our screen this way. So what happened? Price left here and price is here. So we have marked our point of interest. So we want price to come into this zone now. This zone that we have marked, this is our point of interest. We just marked an order block. I will say one of the validity of this order block is that it takes the liquidity of the upside, because in a downtrend, liquidity of the higher high is expected to be taken. So this liquidity has been taken, and it as well take this liquidity here. So we want to see price now return into this zone, and then we'll now find our entry and continue with our buy, because this is an uptrend. So let's go to our 1 hour time frame and see how exactly the price return into that zone. Now this is the zone, and look at what happened. Price return back and tap into this zone. So now immediately price come into this zone. This is a 1 hour time frame. What do we want to do? Remember, I have explained earlier, I said on the 1 hour time, whenever we are making entry, that is when our upper Bollinger Band and the middle Bollinger Band comes into play. Upper Bollinger Band, lower Bollinger Band. So at times, the middle Bollinger Band too plays a role, depending on which of these fall into your point of interest. So you can see that at this time, when this price reverses to this downside, our point of interest falls inside the Bollinger Band. The lower Bollinger Band falls into our point of interest. So you can see the lower Bollinger Band line inside our point of interest. This becomes a double confirmation for you. It is showing you a high probability entry signal. Having said that, the next thing now, price is in that zone, you begin to pay attention to the behavior of the candlesticks. Remember, it takes sellers action to bring price into this zone. And because of that, you are not just going to jump into this trade immediately. You will want to notice the presence of a buyer in order for you to execute this trade. And the only way you can notice the presence of this buyer is via your candlestick pattern that is being presented. So now let's study this. This first candlestick came down and gave us a rejection. This came and the price was rejected. This went and this come, and then finally we have this engulfing candle. So you will make your entry at the close of this candle, and your stop loss is below your zone. Then pay attention now to your commodity channel index line. Your commodity channel index line just crossed above the level of 20 from the downside, and that is your confirmation. So let's move to our 15-minute time frame and see how we can have this same confirmation if we are to trade our 15-minute time frame. So beautifully, look at this as well. Even on our 15-minute time frame, price, our point of interest which we have marked, the Bollinger Band, lower Bollinger Band falls into that zone, which becomes a double confirmation and high probability, because this lower Bollinger Band and upper Bollinger Band serve to us as an exhaustion point. And then here we still have something I call divergence. So this is a divergence playing out in this zone. And immediately after that, you can see how your entry play out, and this is a W chart pattern, and you would have been in this trade. So you can see now how this plays out, and afterward the price took off. So you can see that now price now came back, tap into this zone and continue to the upside. And if you are to make this entry using your 4-hour candle, here is our pin bar. And when this pin bar tapped into this zone of our order block, our commodity channel index as well is coming from this zone, and that gives us a beautiful entry. So this is how exactly you can take your entry. And I believe that you find this video helpful. Please, if you do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. So now price has shifted, and this is our new point of interest. So we are now expecting price to move all the way from here, just as you are seeing now. Price move all the way from here into this zone, and once price get into this zone, we will begin to find our entry back to the upside. So this is exactly how this works. Thank you for watching this video, and we hope to see you in the subsequent video.